Good. So besides tokenization, the topic of DeFi has been present in the broader public for almost 2 years now. Avichal, Garg, Burchardi, Frederik, Gregaard, and Fabian Schär will explain to us in more detail which developments to watch out for and what to expect as an investor. So I'm happy to have you all back here. Welcome back to the CfC St. Moritz, and Fabian, it's your turn.
Thank you very much, Nicolo. Hello, everyone. My name is Fabian Schär. I'm a professor for blockchain and fintech at the University of Basel, and I have the honor to moderate our decentralized finance, or DeFi, panel today. For those of you who may not have heard of DeFi, you may think of it basically as, let's say, open banking on steroids. We are essentially talking about financial services built through smart contracts with the goal to create open, composable, and mostly non-custodial financial services. I realize that sounds very complicated, but don't worry, we have a fantastic lineup with DeFi experts here, and they will help us understand what is really going on. And I would like to start with a quick introduction round. Please keep it very brief because we don't have too much time. Let's start with you, Avichal.
Hello, my name is Avichal. I'm a founder and managing partner at Electric Capital. We're one of the larger crypto-focused VC firms. We spent a lot of the last 2 years focused on layer ones and DeFi, incubated a number of projects, and yeah, excited to be here.
Cool, Kai?
My name is Kai Burchardi. I'm managing director with BCG Platinum, so the deep technology arm of Boston Consulting. Since 2015, global lead for blockchain, just recently developed a DeFi platform. Thank you.
And Frederik.
Yeah, my name is Fred, and I work for the Cardano Foundation, and I work mainly around redefining predictability, resilience, and reliability of public blockchains to enable the architects of the future.
Thank you very much. So we already heard this definition in the beginning, but it was really complicated. And I'd like to hear in very simple terms, what is special about DeFi? Why are you excited, if you are excited, and what are you looking for? Avichal, let's start with you again.
Yeah, I'll keep it brief. I'm very curious to hear what everybody else has to say. You know, my background is mostly as an engineer and builder and entrepreneur. And from my perspective, I think what's most interesting and most exciting here is the fundamental concept that now computers can own money. They can actually take custody of money. And I think this is a very underappreciated concept, right? If you sort of grant for a second that Bitcoin and Ethereum are a form of value and they're all bits, the fact that now computers can natively take custody of this money and actually own it means that we can hand money to a computer. And if you think about literally $1 quadrillion in the world, literally $1 quadrillion of the world is, here's a pile of money, here are a bunch of rules around that money, who has access to that money and under what conditions the money can be moved. And on some future date, please execute some instructions. And that's exactly what computers are better than humans at, is deterministically executing instructions on some future time horizon. And so now we have this infrastructure that's a perfect fit for anything that involves moving money. And so from my perspective, I think this fundamental breakthrough of computers being able to own money unlocks, you know, literally $1 quadrillion of notional value over the next 20 years.
Do you agree with that, Fred? And in particular, I mean, what Avichal just described sounds really exciting, but wouldn't that also be possible with centralized systems?
Yeah, I think from my end, I actually really agree with that. When I explain it, I'm all say something like this, that DeFi is distinct because it expands the use of blockchains from simple value transfer, as we saw with Bitcoin, right, to a more complex use cases, such as cash flow patterns. And then we take cash flow patterns and then you basically match with, you know, the ability for computers really to own assets. Then you have the infrastructure of a whole new world. But what's lacking and where we see the huge issues with DeFi right now is governance.
Could you expand on that a little bit? What do you mean by that?
Yeah, I think most have the kind of the notion of that you can kind of replicate a central bank using smart contracts and put it on a decentralized blockchain. And I think we haven't seen any single project who's been able to do that, right? So when you look at governance tokens and all of those kind of, you know, early kind of tries to kind of establish a market for what is an interest rate or how does the cash flow pattern look like, we again and again see that it becomes a centralized authority who kind of, overrules, or somebody has the keys to basically change the decision because the regulator seems to think that is the only way forward. And then suddenly we get into a situation where we can't really claim that the computer owns the money anymore if private persons or persons for that company suddenly can take over and overrule the actual governance or the community voting in that or on the smart contracts. So I think what we're seeing right now is we're seeing the early stages that you are able to replicate those cash flow patterns much more than just sending money from A to B, and you can do really advanced use cases. But the whole governance aspect about how do you actually remove the bankers and the capital market experts and so on, and have actually create liquidity outside of the banks and the regulators. That's what's really, really interesting, and actually capture the power of the crowd and the knowledge of the crowd in these systems. And I think that's where we're seeing a lot of, a lot of things has to happen right now to see the full potential of that coming out.
It's really interesting, and I'd like to come back to that when we talk about risks, especially what you just briefly mentioned with admin keys and some centralization creep. But Kai, when you have to pick one thing that's special about DeFi, when somebody talks about it, just to understand what's different to the traditional financial sector, could you tell us a little bit about that?
So let me add 1.5 things on that. Let's say one is so the new business model, as described by my predecessors on this panel here, that you don't have necessarily a bank in between who is really cutting off a big margin of the two different interests, for example. That's really what is different, and therefore the margin between borrowing money and investing money is significantly thinner compared to if you have a bank in the middle. The second piece, I totally agree with Fred, is the decentralization of the governance of it. So we currently see a lot of times on these platforms is actually a centralized DeFi, where you have a company who is trying to get these smart contracts in place, but it's still a company in there. And I think scaling this one up into a community platform is the really tricky piece. However, the one where you can really make a difference towards a different economics in a different economy compared to what we have today.
We think about the investor's view, then one reason why we might have this decentralization theater could be that it is really hard to capture value in a purely decentralized system. Do you have any thoughts on that, Avichal? When you make investments, what are you looking for, and how do you make sure that you actually get something back?
Yeah, it's a really good question. I also, I think something we were just talking about maybe worth pushing on or probing on a little bit. One thing to note, I think, about crypto is it's a bearer instrument, right? Whoever owns the actual bits owns the money, which is one of the fundamental differences here between, let's say, the bank example that you were asking about, which is, when you log into your bank account, it's really a representation of money, right? When I log into my Bank of America account, it's not, the money it's really an IOU from the bank, which ultimately is an IOU from the government. And that's a pretty fundamental difference, right? It's like the idea that I can custody those assets myself, and therefore I own the money. Which then unlocks a lot of this sort of idea of what does it mean to be able to do governance in a distributed way. And in some sense, what we're talking about is a new organization mechanism for humans and computers. The idea that potentially tens of thousands or hundreds of thousands or millions of people can in this new network form somehow collectively coordinate and create value. Now, to your question, how do we think about value capture? It's hard, and this is where I think actually, like, being a venture investor is a lot easier than especially an early stage venture investor is a lot easier than other forms of investing, because it's a frontier. And so it's hard for us to say in the very, very short term is network A, is Compound or Aave or Uniswap or any other network, even Ethereum, what is it worth today? It's a very, very hard question to answer. But when you're an early stage investor, we actually get to answer a much easier question, which is, well, is this thing going to be worth at least 10x or 100x what it's worth today when we're first starting out? And that's actually a much easier question to answer. And so I can sort of twist the question a little bit that you asked to, well, are we pretty confident that these networks can grow 1,000x or 10,000x from where they are today? And we feel a great degree of confidence that we're just at the very, very early days of this. You know, $25 billion locked in DeFi is nothing compared to the size of the global financial markets. And so it's very, very possible, in our opinion, that this grows, you know, 100 to 1,000x over the next few years.
Even though we experienced quite an exciting growth, I mean, when you're looking at this, the past 12 months, it grew from $500 million to, if I'm not mistaken, 24 billion, right? When you look at the value locked in DeFi protocols. So you're saying it still has immense potential, if I understand you correctly. Right?
Absolutely. You know, it reminds me, there's a great story from Mark Andreessen, like in 1992 or 93, where he thought like, and maybe it was like 95. He basically thought like all of the good ideas on the internet were taken. And so like the last good idea was to do a browser. Right. And so even like the smartest people in the world, like Mark is literally one of the smartest people in the world. You know, when you're in the thick of it and you go through something like exponential growth, you sort of say, you sit up for a second and you say, oh man, you know, the growth is now behind me. But that's the amazing thing about exponential growth in early markets, is that all of the growth is still in front of you. And so I think it's useful to look at history and you know, when you're in the moment, when you looked at Facebook when it was 100 million users and they were worth $1 billion, you looked at that and said, wow, this is worth $1 billion. But you know, you project that same growth rate forward a few years and you get to, you know, 500 billion, right? So I think we're at the very, very early days of this. And I think we're just, as humans, we're not good at intuiting exponential growth. And so it's even hard for us intuitively to get our heads around just like how massive this can become in just, you know, 5 years.
I think there's another point which is really important when we think about value capture. And that is that when we look at on the governance of some of these projects and what's actually happening, right? We are now standing with a totally different model, right? Because when you kind of value a normal startup, you look at the team, you look at the business model, the market they compete in, but all of that knowledge capture is kind of very small. When you look at some of the projects out there, we're actually looking at projects who's enabling the knowledge of, you know, millions of people. And if you're able to do that in your governance model, that you're not just working out saying, you know, finding the 5 or 10 most smartest people and try to get the value capture of them, but you can actually think about the, you know, the value capture of millions of people in the crowd to take a better decision than the 5 founders, then this will actually outgrow the initial founders. And then you actually see, you know, the exponential growth come very much faster than otherwise it would come.
I would agree. You would need to ensure stickiness. I think stickiness in DeFi platforms is key, because the value that they put into that one is a click, or can move in a click, right? And therefore, it needs a continuous improvement and validation that you still have the stickiness compared to other platforms in order to keep the community growing, or at least keep the community on the platform as well. So these two elements are definitely the enabler for exponential growth.
I think when we're looking at the current structure, the current DeFi market structure, I mean, we don't have any reliable data on that, but I'd say it's likely that most of these people are private investors, maybe some early crypto investors who are interested in DeFi. Do you think that there is a place for financial institutions or professionals in DeFi? And if so, where? And if not, what is missing?
So I have a pretty controversial view on that. So let me lean out of the window and see if my panelists will attack me. But when I look into the crystal ball right now, I think there will be coming a Linux of the CBDCs. And that basically gives you 2 advantages. One is gives you a standard, and secondly, gives you a global settlement layer where the central banks can do this. Now, if that's actually happening, what I think will happen is that the central banks will take over a lot of the role which the current commercial banks is having. And if the current commercial banks is then going to look at the stickiness, as we just spoke about before, and look at how do they actually evolve with the current distribution channels and clients they have to go into Bitcoin and Ethereum, and they have to expand that model from value transfer to cash flow patterns. So I think if that really is going to play out, I think, you know, all of the banks will suddenly start looking into DeFi, not just to save cost, but basically because, you know, liquidity formation and capital formation will move away from the banks to a platform economy. And the only way to get in there for the banks and be a part of that is to reinvent the trust cycle of that by doing that, because the real competitors suddenly don't become the Amazons of the world, but actually the central banks.
I would half agree to this, I guess. I don't think necessarily you need the CBDC as a trigger point for this trajectory. What you currently see is that retail players, so retail customers, going to the DeFi platforms already, for example, via an app or so. Now, they lose this link of the retail customer. And that's obviously the most crucial point for banks. So therefore, a strategy would be much more to make the retail customer have it easier to connect to DeFi by using, for example, a bank for all this sometimes hassle of wallets and going from one cryptocurrency to another in order to get someone on the DeFi platform. So playing this role of convenience player and connect your normal fiat current account to your DeFi platform to your DeFi wallet could be a nice link that they can play even without the CBDC in between.
So basically, if I understand you correctly, what you're saying is that the services themselves, the protocols, they may be decentralized, but for the user to be able to connect, they may still go to a bank.
Correct.
Is that the basic idea? Okay.
Correct.
Do you agree with that?
I'm going to take the other side of this. I think, and I think reasoning by analogies is always a little bit risky, but I think it's illustrative. If we look at the internet, right, we can go back to the 90s, and in the 90s, if you read the history of how people internalized what the internet was going to become, everybody understood that it was the information superhighway and that it was this global marketplace for information and ideas. And the conclusion that everybody came to at the time was, well, of course, then naturally, CNN and the New York Times and sort of these existing media organizations and Walmart and so on are going to benefit from this. And in retrospect, that's clearly not what happened, right? That's not actually who won. Who won were the native digital players, right? Facebook, Twitter, Google, Amazon. And it's because I think when these platform transformations happen at the technology layer, the human organization around the platform has to change. You actually have to change how the humans that are using the technology actually interact with each other. And that requires new organizations to form. And so I think the role that the financial organizations and the banks play today is a very important role, this sort of trusted intermediary role. But nobody trusts them anymore. And that's just backed by data. 70% of people no longer trust banks. And so there's a hole there. And I think what that hole is going to get filled by new organizations. It's going to get filled by crypto native organizations that understand DeFi, that understand how to be proper intermediaries for end consumers. And they will serve a lot of these functions. But to me, it's very parallel to what happened with the internet is you went from these small local monopolies of information, like your local newspaper, to a global marketplace. And I think we're going from these small local jurisdictions with retail banks and small banks and jurisdictions and regulations that really enforce local monopolies to a global pool of capital and global capital formation. And in that world, I think it's unlikely that the people who have set their businesses up on local are going to be able to scale to global.
I think I'm excited, but we just have 2 more minutes. And one thing we have to touch definitely are risks. You already did so in the beginning, Fred, when we have been talking about governance, but I think there is much more to it. So what are you worried about? What could potentially ruin the party and risk the development of DeFi?
I think there are tons of there are tons of critical elements on the technical side, right? I mean, maybe we don't go into that one, but just reading the white paper of a DeFi platform is just not good enough, right? There are some companies out there who can validate smart contracts and how the key management is been executed. However, I think that is fundamental in order to have a sufficient trust from the retail customers and before they can put their money on that. That's clearly an area which is sometimes a pretty big question mark in some platforms.
Right, before we go back to Nicolo, just you wanted to say something as well, right? One quick statement.
I think my quick statement would be that in the last 72 hours alone, more than 25 million new users joined Telegram. So it really proves what we're saying around this new digital governance form, right? And the other part is that the way DeFi is currently working is much more like CeFi, So yes, we took the banks out of the equation, but now we're giving all of our trust to a emerging development company somewhere who has access to backup keys or admin keys and stuff like that. And the general population, including the institutional investors, are not able to kind of go into the code and see if that exists. So I think there's a lot to be done around, the code base and the functional trust layer. And there will be some intermediation who can be done there by banks and other players to kind of not necessarily take control of your assets, but to ensure that there is a trust around who you're dealing with. But the opportunities are simply too immense, and we're seeing, what's happening right now. The biggest wrong thing that can happen is that we go into kind of an ICO fringe. So what we might cry out to the people today would be, please go into DeFi if you're serious, because we need a lot more serious people in DeFi right now, so we can basically get a majority in there before we have too many unserious people just scamming it. We need to ensure the regulators that they can see that real people, real businesses are in DeFi because it works.
Good. So Fabian, because the discussion here is so interesting, I give you 5 more minutes to discuss it. I come back after 5 minutes. Please continue.
All right, sounds good. Yeah, I mean, one thing we haven't talked about is what is missing. What do we still need in DeFi? You touched at some of these points briefly, but I'd like to hear from your point of view, Avichal. What do you think is the biggest part that is still missing in DeFi?
Yeah, 100% agree with everything was just said. I think more serious people is higher quality talent, more serious people across the board. More tactically, I think one thing I'll highlight is from a product experience, I think the user experience is still quite poor. I think it's very hard for the normal person to be able to get their head around how to even do this stuff. So even if they understand what's happening conceptually, you're like, oh, okay, I can borrow money or I can lend money and I can make 5 or 7 or 8% in this new 0 interest rate world. That seems great. How do I do that? How do I actually get off the ground and go do something? And the number of steps you have to go through and what those user experiences look like today is just, it's not where it needs to be. We're in the modem era of the internet, right? It's just so hard. You have to type in a terminal and you have to compile some code and you have to look at some command line output. It's just, we're not quite where we need to be. I think that'll get fixed, but it's probably one of the biggest blockers to people actually being able to use this stuff.
And potentially on top of it, it's again the enterprise grade question: how fast, how much can you trust the code base, the platforms? So something to have. Sorry, I'm German, so there is a TÜV. So in kind of research or a company who's checking whatever smart contract is there, whatever code base is there, that this is really solid. There could be another element which would be helpful in order to get more people on DeFi platforms.
Well, that's super controversial what you just said, because I mean there are some of these companies, right? Some auditing companies.
Yeah,
and when you look at the last few hacks that actually occurred, most of these protocols have been audited, and it simply showed that it's not going to work. I mean, most of these boxes
you can do that.
Yeah.
Or what other companies or platforms are doing is you do an expert panel and validate like pair programming, right? And try to get as many flaws out of the code as possible.
Well, I would add, I think it's a very good point, and I think the real solution here long term is going to be that there will be hacks. So if you look at Wikipedia, for many years people said, hey, how can a bunch of crowdsourced developers or how can a bunch of crowdsourced editors build something high quality? And kind of in these systems, I think in these crowdsourced systems effectively, or open systems or open source, what happens is you do have more bugs, but what you have is also more eyes that are looking at it. And when you have that many more people looking at it, the iteration speed means that you eliminate these issues much more quickly. And so I think what we have to do is essentially embrace the fact that there are going to be issues and then contain the risk. And so we published a blog post, for example, maybe 2 years ago at this point, around the notion of guarded launches. And the idea is when you launch a protocol, just limit how much capital you take in, limit your TVL. And now this is standard practice, I think, for most good DeFi projects. You start with 5 million cap, then a 10 million cap, then a 20 million cap. And what it lets you do is minimize the damage if there's an economic attack. Because even if you do formally verified code and you mathematically prove that the contract does what you think it's going to do, the economic attack vectors and the game theory of it, and the composability on chain of being able to take multiple pieces and mash them together, all of that stuff is just impossible to simulate. You can do it probabilistically, but you can't do it deterministically. And so I think the only answer is assume that there's going to be a hack, assume that there's risk, that you can lose your money, and then let it play out, but just contain the risk. And over a period of 36, 48 months, all of a sudden these systems will be far more resilient than all this code that's powering trillions of dollars of economy today that nobody's ever seen, that there's never been a flashlight shown on it. And I would actually, in the next few years, start to trust DeFi more than I would the traditional financial institutions for that reason.
Yeah, there's this concept called security through obfuscation, right? And that's kind of what we live with today. We trust the Microsoft and all of those of the world because we think they have the smartest engineers, but we have actually no way to control the source code. Yeah. Now we're turning everything upside down, and we're basically saying, okay, now the source code is out there, right? And the only thing we're worried about is actually the economic attacks and some of these governance parts, which I was, looking at, right? I think, what's really missing now is, is how do we de-risk the decentralization for regulators and organizations. And when I say de-risk, it's really, when a government or an enterprise is building mission-critical applications across a wide spectrum of market segments on a decentralized blockchain, what does that mean? And I think what was really well explained here is that it's actually much more about humans now. It's much more about, in our brain, in our systems and how we function. Can we start trusting that more than actually just I trust those guys over in the corner because they look smart, right? And I think that's actually a flip of the human element, and that needs time, but it's coming, and we need to activate not just a couple of 100,000 people in the world, but we need to activate 7 billion people in the world to kind of get to a place where we capture the maximum knowledge of decentralization.
Good. So now I'm back for the second time. Now we have 5 minutes left for the questions. So first of all, as to the other speakers, thank you very much for this discussion. The feeling here, we just started at the surface, but I think we heard really also a lot of important points. So one question that was asked is also, how do we make sure that DeFi is not just another ICO, how do you say, boom or bubble? Because, I mean, if you look at how the DeFi projects developed in the last months, some people, when I had discussion, they were saying like, well, okay, that's just another ICO hype. So I just would like to go through Fred, Kai and Avichal, just how do you see that different to before? I'll start with Fred, please.
Okay, so it's quite easy for me, right? So the ICO bubble was really about how do we democratize venture capital and early stage investment, right? And we found out through these platforms that we could get unlimited access to people, and it was really in the gray area. Now, DeFi is a lot more broad than that. The use cases spend a lot more than what we're seeing today. It's really about cash flow patterns. And I'll make a bold statement. I think you can actually run a bank by 50 smart contracts and a couple of people who takes the legal risk. So I think when you think about it like that, DeFi is going to be much bigger and much wider. But the first thing I have to say is that right now, 90% of all DeFi is run on the same protocol. With that has to change very fast because the quality of that is just not good enough. And everybody knows what I'm talking about there.
Okay, I like your statement. A bank is going to run on 50 smart contracts. I like that. So Avichal, what about you?
I have a maybe contrarian position on this. I actually generally agree with what Fred has said on the bank thing. I think is a great point, but also on this idea that we need smarter, higher quality, long-term minded people. But I think if you look at most markets and how we actually, as markets, bring technology to the average person, the reality is there are hype cycles, and in fact, this overinvestment that happens is what allows the thing that you're trying to bring to market to become mainstream. In a sense, like you need the hype cycle to have enough capital come in when it's irrational for the capital to be invested in the first place, such that it can actually make the leap to the mainstream. And so I think the question is my perspective on it is basically the hype cycle is unavoidable. And in fact, the hype cycle is actually net positive on a long enough time horizon, if you look at it that way. And the question ends up being, how do you minimize the peak of the hype cycle such that the minimum amount of people get burned, and that the only people who are participating are people who understand that risk? Because I think where things go awry is if the person who doesn't understand those risks is participating. If it's a bunch of people who understand these risks and they lose their money, then they knew what they were doing. And so I have a slightly different lens on it, which is I think the hype cycle is inevitable. I think bubbles are inevitable. I think they can actually be net positive in moving technology forward. But you have to figure out how to contain the damage to those people who really understand what they're doing and what they're participating in.
Yeah,
I think the
that's a
hype
good
cycle
point.
is good in order to get attention, in order to get more people into it and look into it, and hopefully come to even smarter ideas. However, I think there's a fundamental difference between the ICO bubble and what we have today with DeFi. ICO bubble was primarily driven or based on white papers. On DeFi, you have real platforms already running, so something which is tangible, and you can always get, in a click, you can get your money out of it again.
Perfect.
Right.
So time is over. Thank you very much to all of you, also to Fabian for the moderation. As we have heard, we are only at the beginning or in the middle of a development that has the potential to change industries. So we will certainly focus on this topic again in 2022 to see how the whole industry has developed, and hopefully with you again. So thank you very much to all of you for your insights, and I hopefully speak to you soon.